Welcome back to Explain the Charts. Today we're going to delve into USDCAD, examining both the recent news and price action on the charts to determine potential trading strategies. It's May 4th, 2025, and we'll be looking at recent economic events and how they correlate with the USDCAD's price movements. We will analyze recent news and events and correlate them with the candlestick chart patterns. First, let's look at some of the key headlines. Recent news indicates that the Canadian GDP contracted in February, Wall Street stocks advanced, and the US dollar gained strength due to the Trump administration's plans. FX Street analysts suggest a potential bullish shift for the pair, with the Bank of Canada likely easing interest rates faster than the Federal Reserve. This could put pressure on the Canadian dollar, while political turmoil in Canada could further threaten the Canadian dollar heading into 2025. Now, let's transition to the daily chart. We can see a significant period of volatility and sideways movement over the past year or so. Notice the major swings in price, indicating significant market events and potential shifts in sentiment. Looking closer at the daily chart, we see a recent downtrend culminating in the last candle's small movement. This suggests indecision in the market currently. However, let's focus on an area of interest, specifically the candles from around late March 2025 to early April 2025. This area shows a sharp decline followed by recovery, indicating a potential support level around 1.40. Now let's switch to the hourly chart to get a more granular view of recent price action. On the hourly chart, we can observe short-term trends and potential entry points for trades. Focusing on the most recent candles in the 1 hour, we see a period of consolidation and indecision. This could mean that the market is awaiting further catalysts to determine the next direction. Finally, let's look at the 15-minute chart for a very short-term perspective. This chart will help us identify immediate support and resistance levels. Examining the recent candles on the 15-minute, we can see there has been very little movement today. In summary, looking at the daily chart, a key support level is around 1.40 and resistance might be around 1.44. Short-term, with the small movements on the 15-minute, it's more uncertain, and we would likely want to wait for the next catalyst in the news. Given the likelihood of the Bank of Canada easing interest rates faster than the Fed, we might expect further downside in the Canadian dollar in the short term, but this could change with U.S. jobs data or political developments. Monitor the news closely, especially any updates from the Fed and BC, which may shift the likelihood of these predictions.